Earnings season can be a great time for a trader to get insight on their equity investments, as well as benefit from short-term volatility. But in order to maximize the trading opportunity, there are some key considerations to make before diving in. Hello friends, I'm Mary and I'm a professional trader. I'm here to assist you in navigating the world of trading. It does not matter which country you're from, how much money you earn, how much you know about trading binary options. I am here to help you. I have free Telegram channels, absolutely free, where I post precise signals and where we can trade together. We can collaborate to enhance your earnings. If you're interested, just follow the link in the description. Formulating a trading strategy for earnings season should include methodology for entry and exits, profit goals, time spent trading, and risk management plan. I can do all of this, so you can simply trust me. Subscribe to my YouTube channel, my Telegram channel, subscribe to my VIP Telegram channel, and follow my signals, and make money together with me. Alright, let's start our trading. Let's see what we have. Okay, looking at the Australian dollar and Japanese yen currency pair, I noticed the situation and immediately enter a long trade. Now, let's figure out what's happening here. We see that within this movement, the price is moving from the resistance level to the support level and vice versa. Currently, we see a strong impulsive movement from the support level to the resistance level, followed by a retracement. According to the Fibonacci levels, we can see that the price reached 50% and reversed. In this case, we can expect a continuation of the reversal. I've already made a video about Fibonacci levels, but in short, the price retraces to either 50 or 61%, and then we expect a reversal and a continuation of the impulse. So right now, we expect an upward movement. In fact, it's already happening. Let's wait for the results now. There are 8 seconds left until the end of the trade. We got a fantastic movement, exactly as we expected. The price made a great impulse. There was a small retracement, but we don't really care about this retracement because the price never dropped to our entry level. Now let's continue trading. I found an interesting situation on the Euro and Canadian dollar currency pair. In general, what do we see here? We have a local support zone. Previously, we had a strong uptrend, and we can see that the vortex indicator has fully expanded. There's also a resistance zone here, which is small and located slightly below. Now let's get back to our trading platform. On our pocket option, and we open a long trade right now for $300 for 3 minutes. If the price starts to drop and reaches the second support zone, I'll open another long trade for the same duration, but for $600. Why exactly 600? Because although there is a high probability of the price bouncing off the zone, there is still a chance it won't. The price might drop a bit further to the second support zone, and in that case, I'll open another trade. In 3 minutes, the price may not recover above the first zone, so I'll go for $600 to hedge against losses. But I also really believe the price will break the second zone because there is nowhere else for it to go. And the price should bounce off either the first or the second zone. Right now we can see that the price has reacted well to the first level and is heading up, so let's wait for the results. We have the last 7 seconds left, and we see that our trade is closing in a confident profit as much as possible in this situation. We got a reaction within the first 15 seconds after starting our trade, and after that the price never dropped below our entry level. So we're locking in the profit and moving on to find the next trade. Let's see what we have here with the British pound against the Japanese yen. But there is nothing interesting here, really. We'll look at the euro against the dollar, but there is nothing exciting here either. The market is a bit slow right now. It's a rather challenging market and there are very few ready-to-trade opportunities. On the Australian dollar against the Japanese yen, there is a small resistance zone. We might consider trading it. Let's see what RSI is showing us here. We'll add the RSI indicator. Alright, we see that RSI is not in the oversold zone. So let's probably skip this currency pair for now. And now let's take a look at the British pound against the US dollar. Here we have an overall ascending movement within a clear channel, but also we have a bearish market and the price is falling globally. Nevertheless, let's open a long trade here. We open the British pound and USD currency pair. We see a very attractive payout percentage, a whopping 92%. We're going to earn quite well here. Now I'm waiting for the price to drop a little before entering the trade so that we don't enter at near the middle of the channel. There are fewer chances of making a profit from the current level because the price is relatively high. We see that the price has started to drop, so we open a long trade for 3 minutes. I think everything should work perfectly here because firstly our RSI indicator is not in oversold zone, which means there is room for it to rise. Secondly, we have a very nice channel movement, just like in the textbooks. See, in this channel, the price moves from the resistance zone to the support zone and back, and during this, it continuously moves upwards without breaking the structure, so everything should be fine, but for now, we'll wait for the results. We've got about 10 seconds left before this trade is done. The trade itself closes with a very pleasing 20 PAP profit. Of course, this nets us a nice profit and we're off to find the next trade. Alright, now let's move on to the fourth trade, probably the last one in this trading session. We have an interesting situation on the Euro and Canadian dollar currency pair. As we can see, the price has reached the resistance zone. In general, we can open a short trade here. By the way, we also noticed that the RSI has come very close to the overbought zone, indicating a potential price reversal downwards. So let's open the Euro and Canadian dollar pair on our trading platform. And now let's immediately open a short trade for 3 minutes with $300. In theory, I believe the price is starting to retreat. The price should, in theory, make a significant pullback after such a strong upward impulse. If we look at the Fibonacci levels, the retracement should reach approximately this level, at least 50%. I've marked it with a red line, but in principle the price could even go lower, down to 61%. I don't know whether there will be a correction after that or if the price will try to break the resistance zone. For us, the most important thing is that the price will certainly make a retreat right now because that's how it always goes. Now let's wait for the results. We've got 15 seconds left until the trade is over. Everything is going well and the trade is currently in profit. Of course, we were a little nervous initially, but after about a minute, everything went as planned. Everything worked out perfectly according to my analysis. The trade closes with a profit of more than 20 PIPs, which is quite good. Now we can switch to trading view and see the size of our retracement. There was a very nice reaction from the zone and we made a nice profit from it. Join my YouTube channel by hitting the subscribe button, give it a thumbs up to show your appreciation, and share your thoughts in the comments to let me know if the content I produce holds value for you. Additionally, consider joining my Telegram channel for real-time interactions every day, and do not hesitate to reach out with any queries.